Welcome and benvenuti to my presentation today. As already mentioned, crypto is not a product, it's a choice. So being here after 12 years in the industry, I'm extremely proud actually to be here today in the year 2025 because it's the first time in history of crypto where we can finally talk about adoption, real adoption and potentially even mass adoption. It's also the first time in history where we can talk about regulatory tailwind on a more global scale. On one side, that's the MiCAR framework that is being rolled out now towards Europe and the European Economic Area. On the other side, I'm active as well in the Middle East, in the UAE, where you have a very competitive kind of regulatory framework focusing on crypto and crypto adoption with ADGM, VARA, the IFC, and so forth. On the other side, of course, we cannot ignore what is happening in the US as potentially the main driver of the future growth that we're going to see in the crypto space. So that's one part of it. The other one, the question that I can ask generally is not really if crypto will succeed and when crypto will succeed, but rather what role are we going to play in it? How can we succeed? How can we be part of this growth journey? And how can we contribute to the further adoption of it? That's all good. The other side of the reality is that I truly believe that crypto is not really leveraging its full potential yet. Because very often crypto is just a little bit downplayed or limited to just being a product that we try to squeeze into as many layers as possible of traditional finance. You can call it ETPs, ETFs, AMCs, and so forth. On the other side, and what's probably even worse, is crypto still limited or used as a tool for all the let's get rich quick kind of schemes, for all the scammers out there and the ones that have been recently at the token event, the amount of Lambos that you see parked outside of the convention center and the hotels is usually a little bit of an indicator for me in what direction that goes. And not be too long ago, like with Pump.fun and all the meme coin launches, I mean, it went to a complete absurdity with now over 35 million different tokens out there. I remember when we started, there were a few dozens and later a few thousands, but 35 million. Try to keep that number in mind. So that's the current applications that we're seeing, but crypto is of course much more. And as it already got mentioned before, crypto for me is the biggest potential driver, but also enabler of structural efficiency and also change for the financial system. And it is also the biggest choice that we as human beings have ever received whenever it comes to financial services in general. Here is the thing. So Satoshi didn't just give us Bitcoin as a nice little tool to play around with, to have a little bit of an allocation in the portfolio or to make the current financial infrastructure slightly more efficient or convenient. Satoshi has given us Bitcoin to actually challenge the status quo. Bitcoin has been given to us as a chance or as an opportunity to opt out of the traditional financial status quo that we're seeing. So it's much more than just like purely an asset. And that's extremely important to mention because it's based on different values and on different principles, going completely in a different direction from what we already know as part of the financial system. And it's here again to challenge it by being available 24/7, 365 days a year. We don't talk about bank holidays and so forth. It's always around for anyone, anytime, anywhere. So that's extremely important. And of course, the ethos of crypto and everything that we're basically doing is going much further than that. So we believe in different values. And one thing is programmability and automation, where smart contracts disintermediate, where smart contracts automate entire processes. We believe in a system of interoperability and inclusion, and we believe in a system of self-sovereignty and self-custody. A system where the owner of an asset also controls the asset, and all of that completely decentralized. That is also the reason why I, back in the days, around 12 years ago, co-founded Bitcoin Suisse because I was fascinated about the idea of decentral money. What can a decentral financial system do to basically us as citizens in that kind of universe? I was studying at that time not too far away from here at the University of St. Gallen. I thought I'm the know-it-all that knows everything about centralized financial systems, but the decentral aspect fascinated me completely. And that was then also the reason why I started to enter the space. But of course, there was not really a lot of money to be made at that time, so the rich get rich quick scheme didn't really work out, and it was also not a ticket for the next Lambo, because we were believing in different values at that time. Bitcoin was completely the underdog. Nobody really knew about it. The ones that actually knew about it, they laughed about it. They said, hey, go somewhere else. You're ruining your career. This doesn't make sense. Yeah, do something else. Luckily, Bitcoin didn't go to zero, and we're still here stronger than ever before. Luckily, there were also some other early warriors and pioneers like Vitalik Buterin and the early Ethereum Settlement Foundation that also joined the space in Switzerland. We were running around at conferences, and the ones that have been around at that time, you know, the resistance that we as an industry struggled, now it's raining, the resistance that we have seen back in the early days was extremely high. So we had to actually put our forces together. We had to go to conferences. We had to actually be out there, educate the people. And it was a little bit absurd as well, because we always brought those Bitcoin ATM machines. We thought that's the coolest thing around when we started in the early days. Bitcoin, a digital concept, decentral money, and we brought physical machines that look like computers from the 80s. We put physical banknotes in it, and we got paper wallets out on the other side. But apparently this kind of message made Bitcoin more tangible. So we did that. We were running around at conferences, trying to educate people and so forth. But again, the resistance was high, so we had to believe in something beyond just the hype. So we were fascinated about the decentral aspect of it, but also the potential it has actually for our financial ecosystem. And we started to realize that what the internet did for information, blockchain technology and crypto can do for value. So we started to build, we started to pioneer the space. We also failed, of course. We reiterated, and we emerged even stronger out of that. Nowadays, as the CEO of a global crypto financial institution, we continue to build, we continue to pioneer, and we also continue to believe in the true potential of crypto and blockchain technology. Because I truly believe that blockchain has the potential to provide equal opportunities to everyone and every person globally at any time. And that's extremely valuable and the reason to fight for sure. On the other side, Bitcoin is a catalyzer, so it's not anymore a cowboy asset used by weirdo people, but it has reached some sort of an adoption, and nowadays we're also talking about Bitcoin as an asset for reserve currencies, and that's a complete different ballpark. So looking a little bit at the reserve asset aspect of it, here is a chart that you see the last couple of years on the growth of Bitcoin as a reserve asset. So obviously it started with us, the early private pioneers that started to accumulate Bitcoin, the early pioneers like Bitcoin Suisse that started to already put Bitcoin on its balance sheet 2013. Later on, it was not just private companies anymore, but also public companies started to follow, like MicroStrategy, Tesla, just to name a few of the more famous examples. But of course, the red part of it is ETFs. We had ETFs already since a couple of years, but the real breakthrough at the end of the day was when the ETFs got actually approved in the US. And you know all the story of the BlackRock ETF, iShares. It was the most successful launch of an ETF in the history of ETFs. So you see also a little bit the magnitude of that kind of adoption and growth. But the most interesting part here is actually on the bottom right part. That's governments. So also governments started to look into crypto, and primarily, of course, Bitcoin as a reserve asset. And while also that kind of adoption started with the early pioneers like El Salvador and some more the exotic countries, but now it's not exotic countries anymore, it's the larger ones as well. We can include the UAE, for example, we can include Norway, but we can also include Switzerland. And I'm not sure how many of you know that Switzerland already actually has crypto indirectly because they bought MicroStrategy shares. And why would you buy that? I mean, for Bitcoin, to have the exposure, right? So Switzerland is already on the list, and of course, the latest example, the US, that you cannot ignore, and that probably will boost this to a completely different dimension. So, but all of that shouldn't come at a complete surprise, because if we think about what is actually the main task or the responsibility of a central bank, it is to ensure stability of an economy of a certain country over time. And what could be better to do that than a non-political, non-controllable, completely decentralized digital asset like Bitcoin? What could be better than that, right? And now we're in a digital age, and if we blend in other elements of crypto in general, but primarily Bitcoin, when we look into its scarcity, into its neutrality, into its security, it can actually, it has the potential to become a digital form of gold. And we're living in a digital age, and we need a digital form of gold. In my point of view, Bitcoin perfectly fulfills that role as the digital gold. But of course, all of that is also based by facts. Looking at this chart here, where we see the low correlation of Bitcoin with other assets, like bonds, like real estate, like gold, like equities, and so forth. And that's extremely interesting because the correlation of Bitcoin with all of those other asset classes is extremely low. Of course, in times of uncertainties and economic turmoil and so on, the correlation tends to be higher. But in a long-term time frame, the correlation is extremely low. And that's an extremely interesting aspect when it comes to the portfolio theory. And I'll come to that in a minute. Another interesting aspect is the asymmetric kind of performance of Bitcoin. If you go back to the last 12 years of Bitcoin, in 9 out of those 12 years, Bitcoin has been the best performing asset. In the other 3, it has been the worst performing asset. So why is that relevant, or why is that interesting? If you come in now from the portfolio theory, you want to have a portfolio completely diversified. You want to diversify it over asset classes, you want to diversify it over geographics, and also over time. And Bitcoin as an asset that is completely uncorrelated to all the other asset classes is extremely valuable to that, because you also want to have your assets uncorrelated over a longer time frame. When you blend in the volatility aspect and the performance, you usually don't mind certain volatility in a portfolio if it goes to the upside. And Bitcoin also fulfills that role. So if you have a standard portfolio where you have a fixed allocation of gold, of equities, of bonds, fixed income instruments, and you start to actually take away 1% of the equity allocation and put it into Bitcoin, what happens is that the Sharpe ratio goes up, basically your return per unit of risk, and the annualized return. So also from a portfolio perspective, just simply from the theory and trying to diversify a portfolio, it's almost impossible to ignore the effects of Bitcoin nowadays. That, of course, applies to your private portfolio, but certainly also to what governments are doing. All of that is great, but now here comes the big but. While I'm happy and I'm proud to be here today and talk about portfolio dynamics and performance and Bitcoin and so on, and again, Bitcoin didn't go to zero, I'm also happy for that. I still think that Bitcoin as a new technology, as a beautiful new asset, as innovation, is still often squeezed just into existing rails of TradFi, and we're not really leveraging the full potential of it. To understand what I mean with that, we need to go into the year 2025, which coincidentally is now, and look a little bit at the absurdities if you look at the traditional financial system. One aspect is the time that is needed to move money. And I guess everybody here can sing a song about that, but it's still crazy that we're talking about days and not minutes or seconds, as it is normal with blockchains. So the absurdity is, again, bank holidays, and sorry for the bankers in here, bank holidays, 9 to 5, weekends. I mean, blockchains are on all the time, right? So, I mean, that's a little bit a funny aspect. If we even go further into the absurdity, sometimes it's easier to send a physical letter across countries, and it's faster there than bank transfer. If you have larger amounts and even try to send it like to the US or another country, the letter might even come back in the meantime. And that's somewhat crazy in the year 2025. The cost to use that as well. So on blockchains, we're used to like fractions of a cent, maybe cents. In the banking industry, I mean, we pay banks a nice fee, and they actually take our money, and thanks to fractional reserve banking, make even more money with that. Good business case for the banks, but I mean, compared to the crypto universe and where we are, also that feels somewhat absurd. The value of money, and when we talk about inflation, is still decided by a handful of people sitting around a table. In the crypto world, it's a fixed supply, it's code that is defying basically exactly that. When we talk about inflation, and everybody thinks it's like a little bit a weird, non-tangible concept, but the Swiss franc itself lost 50% of its purchasing power over the last 50 years. It lost 80% over the last 100 years. And that's Swiss franc. It's not, don't know, Zimbabwe dollar or something. It's crazy. You need to think about that. And everybody here that has a savings account or a pension fund, I mean, we are the ones that are being screwed by exactly this system. Because at the end of the day, it's like holding an ice cube out in the sun. It's just melting away. And 2, 3, 4% of inflation rate per year might be okay, but you're saving for like 50 years. So do the calculation or the math over a little bit a longer time, and you exactly understand what I mean with that. Something is fixed by the protocol, the other one is, let's say, more fluid. Then the access is also an interesting aspect, and the ones that have been early in crypto, and I know that myself, at the beginning, banks didn't really know what is Bitcoin and this Bitcoin Suisse, what they're doing. At one point, they figured out, and then they started to kick us out. So we were unbanked for a couple of years. And that might have been the early days, 12 years ago, but that's also more a recent example if you go to the US. And everybody that suffered from Operation Choke Point, for example, knows exactly what I mean. And it's not just crypto, it's also AI companies and so forth that were systematically kicked out of the banking sector. And that also shows us how vulnerable we are, but also how dependent we are still on the traditional ecosystem. And then, again, against the ethos of your keys, your control, so you can be your own bank in the crypto world. Then the last one, and I would like to say my favorite, but it's unfortunately not. Banks frequently need to be bailed out. Blockchains don't. And we're all sitting here in Switzerland, and everybody's super proud for the banking sector, and we have like large banks and so forth. But it's not too long ago until we had the latest global economic recession and financial crisis, and the two largest banks had to be bailed out by taxpayers' money. Very recently, we thought it's a clever idea to even merge them together and create even a bigger systemic risk. Those things do not happen with blockchains, right? So that's a little bit the point here. So what I'm trying to say is that it's not about adjusting the current system and making it slightly more convenient or more efficient. It's about challenging it and creating something entirely new, something better, something based on new principles of transparency, of fairness, of efficiency. So the question is a little bit, is it already time for change? And of course, you know a little bit the history of money, and it helps to also go into that. We don't have a financial system nowadays that we had since the inception, basically, of mankind. So at the beginning, we had a commodity era where we traded with, don't know, fish against the cattle or so on, but it's not very convenient to transport a fish through the country and then try to trade it against something else. The durability of those assets is not really given. So we started to trade something else that seems to be rare, depending on where you are, like salt or shells and stuff like that. Later on, we were more attracted by the shiny goods, like gold, like silver, and other similar stuff like pearls and so forth. But of course, also that is a little bit annoying to transport it around. So we thought it's a good idea to put all of that into a safe, print a piece of paper, and give that out to whoever has the paper to have then basically a claim to whatever is positioned in the safe. That system worked pretty well for quite a long time until Bretton Woods and Nixon then decided to temporarily suspend the gold standard and to actually just go to the fiat standard, because it was easier to just print the paper money. Why would you care about gold, and you don't need to have the gold in the first place? So where we are currently is the fiat area, where we have a certain dependency, of course, on the government, always associated with trust. In Switzerland, I think that's okay, but depending where you're from, the trust into the government might not always be the best thing, especially if you look into your life savings. But that's the current situation. So now we're in a digital era where we have other assets and also other opportunities. And the question is, of course, is that already good enough for a new kind of change, for a new era or not? But we have Bitcoin, and I talked before about the portfolio relevance of it. I talked about the reserve currency aspect of it as a digital form of gold. We have stablecoins, we heard about it before. Stablecoins are probably the biggest use case in crypto at the moment with the highest adoption. Of course, there's still fiat currency in the background, but when we look into numbers and volumes, stablecoins are one of the key adoption, let's say, elements that we have seen in crypto so far. Then we have the on-chain risk-free rates, which is staking at the end of the day, and everybody in here that was staking Polkadot or Kusama or something similar in the past, you know a little bit that we're not talking about a few basis points, but percentages. Of course, there's an underlying asset to it. That is, of course, also volatile, but over time that will flatten out, and then we have the ability to contribute to the security of a system by doing staking, by contributing to the network and ensuring its stability and security. And that's exactly the on-chain rate, risk-free rate. Tokenization, we can bring liquidity to normally illiquid assets. And then, of course, DeFi, we can bring access to the ones that do not really have access to financial system thanks to DeFi. So all of that almost is a perfect and complete setup to challenge at least the status quo where we are in. And then it's just a question of when will the current system change? How much time will it take and how will it happen? Because if we blend in now the fact that fiat currencies are on average, they have a lifespan of 40 years. You can do the math. US dollar have been around for 100 years or a little bit more. How long will it take until something new happens? And again, I probably cannot pay out here my coffee with salt or shells or half a fish. So also the current setup that we're in might change one day into the future. And why is that the case? I guess I do not need to explain that to you in greater detail. You have been here the whole day. But it's obviously about ownership. You can control your own money. Whoever holds the keys also controls the assets. It's about efficiency, 24/7 availability of those systems, low fees, transparency, and accessibility. Basically all the flaws that I mentioned before with quite current examples can be improved by what we already have today. And that's basically Bitcoin, crypto, and blockchain technology in general. So what I'm trying to say here is we need to build the way it was intended and stop trying to squeeze something beautiful new, a new innovation into the existing kind of rails. I mean, that's a good start when we talk about mass adoption, and of course we need to embrace everyone, also coming from the traditional world, but the potential is much bigger. Talking about the potential, Bitcoin is still, after all those many years, 0.2% of global assets. Bitcoin is, by the way, the small little b in red here. The small little c is crypto as a total, but since Bitcoin is 65% of crypto, the relevance is of course there. But if you just compare that with gold, for example, you already see quite a substantial way ahead of it. And also, if people ask me, hey, is Bitcoin over or so on, or what's the potential? Yeah, look at that chart. Another example, and the ones that have been in the space are probably sick and tired to hear RWAs, real-world assets, but I bring it up here because it's just a gigantic market. RWAs is a $500 to $1,000 trillion market. If you just tokenize 1% of that, it's already going to be massive. It's a $5 to $10 trillion market opportunity that you can create basically overnight. So whoever builds the infrastructure, the services, the platforms, the systems for RWAs or for the tokenization of it will be the infrastructure of the financial service industry, rock stars basically of the 21st century. But that's going to be a huge opportunity, and eventually we're going to get there. But we should not be tricked by it, so there is also a fallacy when we talk about mass adoption. Because looking at the users of MetaMask, basically the direct interface to the blockchain versus just Binance, that has 250 million users versus 30 million wallets on MetaMask, you see a little bit the magnitude or the difference of that. So one thing is the direct interaction with the blockchain, the other one is just exposure to the blockchain. Binance, by the way, announced that they want to reach 1 billion, I think by the next 3 years or so. So it's quite an ambitious target, but it can happen for sure. So the thing here is, if we want to talk about mass adoption also of blockchain technology, but the interfaces themselves, we need to focus on its benefits, but we also need to improve a lot of different things. One is education, basically being out there and spreading the gospel and talking to people and trying to bring them on the journey, showing them the path on how to start with crypto is one thing. The other one is UX and UI. And now the ones that use MetaMask here, you think, yeah, MetaMask actually has great UI and UX. I fully agree. But compare that to Binance, it's still like easier to interact with, especially for somebody that doesn't really want to touch blockchain directly. So they still depend on those kind of interfaces. And I think there we can definitely improve. And the other one, the most important one, is real-world use cases. So there is, in my point of view, still a lack of solving real-world use cases. Very often we have crypto projects out there that try to create some sort of problems, and then coincidentally they have the solution to it with their own technology, but that's not a very sustainable use case. We need to focus on real-world problems and how can we solve them. Stablecoin, for example, is exactly such a case that is solving exactly that. Then the key to mass adoption is, and I think we have heard it before as well, you need to use blockchain technology without actually knowing that you're using blockchain technology. Because not everybody here actually wants to use a wallet and does do private key handling and send around transactions themselves. but the underlying technology should, of course, do that. Because if we want to change the current financial system as it is and want to benefit from the efficiency and also the real potential that crypto has, we need to focus exactly on that. But we should also stop trying to squeeze everybody onto using blockchain technology if they do not really want to do that. So there is an acceptance that we need to have when it comes to that fact. And then, of course, the true adoption is happening once the technology is underlying of what we're using in the daily life. So essentially it comes down to this, it's a choice. It's a choice if you want to be in crypto or not. And that's why we decided already many years ago to not just list individual assets on Bitcoin Suisse, but we wanted to support ecosystems. And this is exactly what we're doing. We support ecosystems, we work together with the founders out there, with the foundations, and that's maybe, we were talking yesterday about shilling, maybe a small announcement I can do here as well. I'm extremely proud to announce that one of those partnerships is with Mystical Labs and Games. So we, as Bitcoin Suisse, we start to become the first institutional grade validator for MIF, starting next week, so keep that for you. But that will start very soon, and that's exactly one of the examples on how we want to support the ecosystem and grow together with the ecosystem, because we learn as a financial institution from them. We can help them and embrace them to grow into the universe that we're all in of financial services. So that's one of the things, but of course also, we see here Bill, and thanks a lot for having us here and for the coordination and organization as well. We, of course, also want to embrace everybody coming from the traditional financial sector, because that's important if we want to reach mass adoption. Because you have the users, you have the trust, you have the assets as well, and we need to embrace everybody that wants to come and join from the traditional financial industry and guide you basically on the way towards crypto. So it all starts with a choice. It all starts with a choice. Do you want to be in crypto? Do you want to just use it as an asset? Or do you want to actually build together with all of us and build the future of financial services together? So it's red pill or blue pill. The choice essentially is yours. What choice are you going to take? Thank you very much and have a wonderful afternoon.